Good morning and welcome to episode 15 of BuiltPlace's Housing Conversations. Today I'm delighted to be joined by Tom Hall, Chief Economist at Barbour ABI, and he's going to be talking to us about what's happening in the construction industry thanks to the pandemic and what might be coming ahead. So first of all, we're going to start off with a few slides, and so Tom is going to run them through for us now. Tom, thank you.
Thanks very much, Neil. Pleasure to be invited to such a prestigious stage where I can hopefully share a little bit of insight for you on what's going on in the construction and planning industry. So Tom Hall, Chief Economist of Barbour ABI, well-known sales leads and market intelligence provider. So let's get cracking. Just fire on. So what I've got for you today really is just a brief overview of what's been going on in construction in 2020. It's been a bit of a interesting year for construction, as I'm sure we all know. So a bit of a kind of recap on what's happened, then a bit of a look forward in terms of, and look back actually in terms of the planning environment, what's been happening, especially looking at contract awards. And then a bit of a look forward looking at some of our most recent forecasts for some of the main areas of construction, probably focusing a bit more on residential than the others, and then finally moving forward, some key issues and risks, some probably fairly obvious to most people, but we'll talk about them anyway, moving forward. Move on. You can skip over that really, AMA and Barbour ABI. So in terms of construction industry so far really, obviously, activity both in the construction and planning environments was very high back end of 2019 and early 2020. We certainly saw a bit of a bounce, especially in the planning environment post-Brexit in January and February, and just generally, the certainty after the clouding of all the Brexit and general election type stuff back end of last year felt like it had unwound a bit. But then obviously with the onset of the coronavirus pandemic, we saw massive site closures from mid-March, increasing really to early April. The graph on the right-hand side is our record of delayed, open and restarted projects over time by value. So the dark blue line is delayed projects. The red line is your confirmed open projects, and your dotted red line is your restarted projects. And we were able to, retool our research team to start focusing on trying to understand what projects were delayed and what weren't. So project by project, we were able to identify and confirm whether or not they were open or closed. So we managed to find about 50% of projects that were closed. That correlates pretty accurately even with the ONS's data, which is somewhat reassuring. In terms of the most affected sectors, residential and commercial. Residential, the unilateral decision by the major house builders to close all sites in the UK had a big impact, contributing to that 70 billion in total. But also commercial centres, especially in London as well, which obviously had the biggest impact early on. Big commercial projects in London shut down. Obviously Scotland as well, closing all sites also had a big proportional impact. Least affected sectors, healthcare, naturally, due to the cause of the pandemic. Healthcare has been relatively unaffected. Infrastructure as well, less affected. Certainly, people like the Highways Authority took the opportunity to do work that they've been putting off for a little while with no one on the roads, things like that. So that's obviously supported activity through lockdown. And then, interestingly, at least, industrial sector, we were unable to identify that many industrial projects that were closed, whereas the ONS suggested there was quite a lot, which is a bit of a difference. That's one area where we're quite a lot different from the ONS, which is interesting, and don't know why that is. May well never know why that is. But obviously, since then, we've seen very speedy return to site, led by the residential sector. I think we probably should be celebrating that, actually. the willingness of companies to return to site and the willingness to adopt safe working measures, and things like that, really positive for the sector. And since then, we're broadly back, actually. If you look at our data and the ONS's data, shows that we're broadly back to, not far off at least, pre-output levels, which is really positive. Obviously, as well, major impacts experienced as we came out of lockdown. Material shortages, very severe with the closure of builders, merchants, and manufacturers ceasing production. So that was a real issue in May and early June. And on-site productivity has improved hugely. Initially, it looked like we're looking at kind of a 70%. Sites only being able to operate at 70%. Feels like we're back at 90%, although there's not a huge amount of concrete data at the moment. But it does feel like those site productivity, social distancing measures, site safety measures, coupled with the longer site opening hours, is mitigating a fair chunk of that productivity. So next slide, please, Neal. Moving on to talk about the planning environment. So I've got two slides on this. This is everything. So the graph on the left-hand side is contract award values over time from early 2019 to September 2020, which is the most recent data we have. And the different colours are the different sectors. You may not be able to see that, but I'll try and talk through it. And again, just to reiterate the point, really, so you can, in the kind of second half of 2019, you can see the impact of the uncertainty on Brexit in the contract awards there with that dip, subdued activity, and then the unwinding of that, the catch up in January and February, as we got a huge amount of infrastructure projects in January, and then a huge amount of residential projects in February. Then we saw the lockdown, unprecedented lows, 1.6 billion contract awards in April, and then 1.5 billion in May. Bit of a recovery in June, and then since June, the last 3 months, we've seen a return to more longer term average values. So 6.3 billion in June, 3.9 in August, and then 6.0 in September. If you think about kind of a long-term average contract award is kind of 4.5 to 5 billion pounds a month. So we're back to a level. It's difficult to know. Certainly, a proportion of that is probably catch up again from stuff that would have occurred in March, April, May, maybe June as well. So I guess my expectation moving forward, given all the uncertainty and the downside risk at the moment, is for a kind of average to low average over the rest of 2020. I'd like to draw your attention to the tables on the right hand side. So I've been attempting to develop some form of a kind of relative strength index that we can use to try and understand activity levels and intensity levels a bit better. So this is my relative strength index for all sectors and the various different sectors for contract awards, and then region by region where that recovery is happening. So it's quite interesting, actually. So you can see that, I should obviously explain the scale. So minus 100 is, it goes from minus 100 to plus 100, where 0 is your kind of average activity, and minus 100 and plus 100 being your absolute extremes. So we hit kind of minus 90 something in April and May. So that recovery really is happening over the last 3 months in medical and healthcare. So really hot activity in medical and healthcare sector. Industrials come back strongly. That's mainly been driven by warehouses. And then, but the scale of the numbers has been more driven by the return to average values for infrastructure, which is obviously the second biggest sector. Interestingly, commercial and retail coming back, reasonably, but you can see the other commercially minded sectors, residential and hotel, leisure, sports sector, still remain pretty subdued compared to normal activity. And then where's that happening? So it certainly looks like London and the South East are very much slower than where they were previously. More activity across the north, certainly northeast, east of England, southwest and Yorkshire are leading the way at the moment. And it does look like, the southeast and London are slower quite significantly. Next slide, please, Neil. So this is the residential planning planning area. So similar slide to the last one, really. So contract award value just for residential this time, so you can really see the impact in April and May, and that huge amount of contract awards we had in February, I think. And I think just really where I want to draw your attention to is where that recovery is happening in the subsectors, which is the top right table. So huge amount of activity in the care sector. So elderly persons' homes, lots of activity there. Some maybe slightly higher activity in your public sector, but that those private developments way down still. Interestingly, flats and apartments coming back strongly. There's a bit of a gap in the planning pipeline in terms of flats and apartments. Going into lockdown, actually, the pipeline was very weak for flats and apartments, and our forecasts are actually showing that flats and apartments are pretty weak. So it may just be that the last month or so we've had a bit of a filling of the pipeline in that area. So I'm a bit loth to draw too much attention to the flats and apartments number there, but certainly the residential care sector coming back pretty strongly. And again, residential, where is the activity happening? So again, Yorkshire, Northwest, West Midlands, and very subdued activity in London and the Southeast, looking really slow. So that's residential. Brief look forward. So using our data, we're able to develop a set of forecasts for construction output, because we know where, supposedly know at least where projects are going ahead and when they'll happen. So we can allocate that value to future periods to understand what construction activity might look like. So give an indication of what is happening and where it's happening. So this one's for residential. So the graph on the top right is construction output, and you can see the forecast on the right-hand side of that with the lovely error bars around it. The lower right-hand one is the regional forecast. So you can really see the impact of the lockdown in Q2, but again, that really quick return in Q3 to almost pre-lockdown levels. But interestingly, the pipeline isn't stronger moving forward. So it looks like we're more going to kind of recover to a level that's some way below previous highs, and we're kind of returning to more kind of 2017 type residential output levels at the moment, at least. Obviously, there's a huge amount of downside risk out there at the moment, which is, at least in my view, what's driving that gap in activity. Certainly, the focus so far in 2020 has been on finishing projects that are already underway. But I guess in terms of positive news, we're not seeing a slump. House builders are not at the moment responding to the uncertainty by not starting new work, at least. It's just at a slightly slower rate than they were previously. Obviously, the record demand at the moment maybe driving that. Again, as yourself and other commentators have mentioned, have noticed, the uncertainty over Help to Buy and the possible cliff edge that we might be facing in March leaves us still pretty uncertain over where it's going. But certainly, in terms of our data, looks like somewhat lower activity levels across the UK. Again, sounding like a broken record here, but yes, certainly stronger across the north of England generally, and weaker across London and the southeast compared to previously. Certainly, according to our data, London had a really strong 2019 after a few years of subdued activity. and again across different sectors, student accommodation really weak. Retirement homes is really the growth area in residential, probably the only major growth area that we're seeing, where there's a really strong pipeline there. So it's residential. Thanks, Neil. So other sectors, just kind of a brief summary of other sectors, what's going on. So in terms of the commercial sector, that obviously includes retail and offices, at the moment, there's no suggestion that it's going to be returning to previous output levels anytime soon. In fact, certainly not over the forecast horizon. Again, subdued activity in London and the southeast, more growth in the north. At the moment, looking at this, the different subsectors within the commercial sector, there isn't a huge amount of change. The one growth area is food retail, lots of activity there, but we haven't seen the impact on the pipeline yet of, I think, the things that we're all expecting in terms of, with the changes to working environments and things like that. Everyone's expecting the pipeline for offices to fall dramatically. We've actually, seen a continuation of that in the last few months of new office projects coming through. Again, it may just be legacy stuff that we're picking up. It's difficult to say, almost impossible to say at the moment, whether those will come through. But yeah, not really any change, weak but stable activity going ahead, but at lower levels than previously. And then the lower graph is infrastructure. So infrastructure really, as other people have noticed, that the infrastructure is supposed to really is expected to really hold up the construction sector overall over the next, certainly short term, but also medium term as well, given government pronouncements in this area, and that's certainly borne out by the infrastructure pipeline and our forecast. So relatively little impacted by all the site closures in Q2, and then a fairly quick return to previous activity levels. And we've got to remember as well, obviously we do have, you've got HS2 in there and Hinkley, etc. But we haven't had any, apart from, the vague promises on hospitals and, green spending and things like that, everything that, the numbers that have been promised so far have been relatively small. And we certainly haven't seen any, the projects coming through massively. So, that's the forecast that we have is really before any of the all of the promised investment comes in. So there's plenty of upside risk, it feels like, at the moment here to those forecasts. For me, the big question is on when that scale investment is going to hit. There's certainly been I've heard from a few sources that the government's looking at smaller scale projects to get work happening in the more shorter term. So I think that's maybe a recognition that the scale that we're talking about, that's being talked about, is unlikely to hit 2022, 23, maybe could be even further out than that. So while there is upside risk, it's maybe more medium/long term upside risk. But we await further announcements over the next few months. We're so positive for the sector, but really infrastructure, it feels like infrastructure, healthcare, going to hold up the construction industry over the over the next few years. Slide, please, Neal. Thanks very much. So a couple of finishing slides. Hopefully all of this isn't too much, isn't stuff that everyone knows already and is boring, but certainly over the short term, as I've mentioned before, a huge amount of credit, I think, should be taken by the industry for returning to work in the way it has. Really positive news story there, I think, and how it's changing and adapting to the obvious very major issues that we have to cope with at the moment. On-site productivity really is, to me at least, the main issue, the biggest issue that is continuing to be grappled with. Looking forward to some, empirical studies which actually quantify that over the coming months. We're used to data coming so slowly, and really certainly what this crisis is showing us, that a lot of our data is just too slow to really react when you get something of this scale. So looking forward to seeing some hopefully more robust numbers in terms of what the actual productivity gap is, and we can understand that a bit more. We're still getting some reports of material and product shortages, though not in really any major volumes. But it's something to be aware of, especially as we move towards Brexit. And even though we've had 3 months of reasonable contract award numbers now, still pretty uncertain planning environment. Movement restrictions from COVID certainly could put the damper on, at least regionally, wherever that happens, on the construction industry. Obviously Brexit comes again. It's very difficult, very uncertain to know what is going to happen there. Very difficult for firms to plan. Certainly, labour risks, material risks, cost risk and timing risk there, huge amount. And obviously wider macroeconomic risk as well over the short term. Seems to be generally accepted that we're going to see unemployment returning to levels certainly not seen since the 1990s, and the impact on that on consumer spending and demand for housing and things like that as well. Uncertain how much that's going to be and how impacted that's going to be. But a positive is that we really haven't seen any widespread project or planning delays so far. Certainly, anecdotal evidence suggests that we've had there's been increases in certainly litigation and contractual dispute and stuff like that. But we certainly haven't seen an explosion of projects being pushed back, 3, 6, 9, 12 months. Nor have we seen a huge amount of evidence to suggest projects are being held up at the planning stage or before that. So that's again some really positive news that I think we should take us forward in an amount of positivity, hopefully. So yeah, final slide, please, Neal. Thanks very much. So final slide from me before we do some chat. So in terms of medium term, obviously you talked about this before, but the risks are still there of increasing delays, disputes, potential for construction company insolvencies. Obviously, with margins so thin, there is always that that issue. Everyone's very sensitive to price shocks can have a big impact on your bottom line. Inflation as well among certain goods with the advent of Brexit, and all that uncertainty has the significant potential for investment decisions to be put on hold. People sit on their hands. We're making decisions about the future. Talked about Brexit already, but obviously labour shortages, delays, price increases, all that kind of stuff. I think I look forward to seeing more information on the government's immigration plans over the next few months, because at the moment it does seem like there's going to be a cliff edge for construction labour. Whether or not we get a Brexit deal, just there isn't any provision for construction workers, and the criteria doesn't seem to be particularly helpful for them in terms of the post-Brexit world. So look forward to more information there. Talked about the macroeconomic risks there. Again, planning bill, such a great opportunity there to really kind of try and unknot some of the difficult issues that we've had there, but at the moment not particularly impressed with what other people have called a developer's charter. And then residential market as well. Doesn't feel like we're in a particularly happy place with it, so dependent on government intervention. Stamp duty holiday and the lockdown coming out has obviously massively boosted demand, but that doesn't necessarily create happy market conditions. And with the residential market so dependent on a continuation of Help to Buy, it's now baked in that we have to stimulate the residential market to achieve any semblance of the targets we want to achieve, which doesn't feel like a happy place from an economist that supposedly should be encouraging free markets. Anyway, another point in terms of really just there's been a huge amount of talk about the opportunities for construction for embracing technological change and innovation. Certainly people have been talking that way for a lot longer than I've been in construction. And I don't think that COVID is going to be this kind of magic bullet to solve the issues. What we need is a long-term strategy, the money and confidence to be able to fund that, and then the willingness to see it through, really. But the opportunity is there and the willingness is there. Have never been greater, and the threats are there. So that's it, really. Trying to be positive in an area where there's plenty of downside risks, but also some upside risks, and great opportunities as well as some threats there. So that's me. Thanks, Neil.
Tom, thank you. That was a fascinating look at the construction sector. There's clearly a lot going on and a lot of variation between the different sectors, and
sure.
Not just within residential but across the whole industry. But also one of the things that struck me in particular there was the regional differences, not just in housing but across the whole construction sector, with clearly London and the southeast still struggling, and a lot of the growth being driven by the north, whereas now we're looking at increasing rates of coronavirus in the north of England in particular.
Sure.
And there's talk about locking down certain areas, again probably the north of England. I was just wondering if you had any thoughts about what the potential impact of a second lockdown, even if it's more locally driven than a national one, might have on the sector.
Well, yes, great question. Very difficult to answer, I think. Is probably my initial response to that. I think it's difficult because all the evidence we have of how people are faring is all anecdotal, and there's been some really positive anecdotal evidence that sites are now safe. People have adopted all the guidance, and there has been a huge amount of work, and it should really be celebrated. And so, I mean, I'm hopeful that we won't see, at least at a local level or a regional level, the kind of widespread closures that we saw in late March and early April. It does feel like the government is doing everything it can to keep Britain at work, as it were, because it wants to avoid the economic shock that happened in April. So I mean, it would be slightly surprising, but if we get to the same stage, and it does look like, certainly when today, that we are potentially at the beginning of the exponential increase, that if we do get back to levels that we were at in March/April, it does seem like the only thing that we can do is to just is to do the same thing again, really. So I mean, we had the opportunity. I don't want to start being too negative, but the opportunity was there to have a robust test and trace system back in. We've had all summer to do it. Doesn't feel like it's there. The sooner that those kind of the regional, local level test and trace is in place, and the better it's working, the more chance we have of avoiding, the economic impacts that we saw. It's not a case that you're trading off economic activity versus public health. It's just a case that we need the best systems that we can to try and mitigate the two.
Yeah. Well, in that, you mentioned clearly the construction industry, along with other sectors, has adjusted to the new hopefully short-term normal, and with changes in working practice and health and safety and everything else. I was just wondering if you've seen or heard anything around what that might mean for the actual capacity of the construction sector. Are projects taking longer to build out, or are companies contractors less able to be as active as they maybe were prior to the pandemic?
Yeah, well, we haven't. I mean, we haven't seen a huge amount of evidence for that. So we have started tracking back in early summer, individual projects, and trying to understand whether there were, project end dates were being extended, projects were being slowed through planning. Haven't seen a huge amount of evidence of that, which again suggests that projects are being completed, and things are. We've certainly noticed that there's been an increase in contractual disputes and things like that, which implies that as you might imagine, I imagine costs have cost targets have not been hit. But we certainly have seen that willingness to get back to work, and that, so, you know, we haven't really seen projects being extended by 3, 6, 9 months, which is what we expected back in early summer. So that's really positive, and you know, hopefully it is being done with social distancing in place, and all that stuff. And you know, so anecdotally, it does seem like construction could continue, which you'd hope again, which means that you know, fingers crossed, if the construction can continue, is a bit more resilient, hopefully, compared to some of the other sectors that might be more impacted. But you know, I think what's critical is you know, is saving lives here, and I wouldn't ever want to advocate, you know, keeping construction sites open when there would be a possibility that we could that you know, we could save lives. So you know, positive, but at the same time, I'm cautious, depending on how the winter goes, because it does feel like we're in for a bit of certainly a difficult winter.
Yeah. You mentioned the planning proposals, changes to the planning system, and
Yep.
you know, it was a very housing focused document. You know, there was very
Sure.
little in it other than about housing, and you know, that's generating an awful lot of debate within housing
Sure.
sectors. And I was just wondering what the view of the wider construction industry. You know, you mentioned infrastructure during your presentation as being essential, and
Yep.
you know, there's very little talk around, you know, all of the other important parts of the construction sector.
Yeah, you're absolutely right. I think I mean, there's some positive noises that I've heard on my travels in terms of, you know, thinking of just a slightly wider thinking, you know, not always thinking about lowest cost, build cost, go with that every time, you know. So it's positive that it feels like we're hopefully taking somewhat of a more holistic approach to, you know, designing the built environment. So, you know, infrastructure interacts with housing, interacts with commercial, interacts with all the public services. You know, I think my feeling is that, you know, we need more, better planning compared to less planning. I don't feel like it's regulation that's stopping us having a great built environment. I read somewhere that planning budgets have been cut by 40% since 2009. I can't remember where I read that. You know, and the pressure that you know, local authority planning departments are under is more than it's ever been. And to me, you know, build back better, build back greener, you know, great sound bites. Well, you know, what do they actually mean? You know, better for me is not only you know, technological change and innovation and things like that, but it's also, you know, it's about health and well-being, and about, you know, trying to maximize the potential from everyone in our society and all those kind of things. And you know, the built environment has such a big place to play in that, with, you know, integrated solutions, with obviously, you know, green investment and things like that really promotes well-being, you know, green spaces in our cities, you know, transport links that allow people to efficiently move around their, you know, daily lives, local solutions, both in the, you know, commercial realm, and also, you know, to promote, you know, social all the social stuff that we all benefit from as human beings. So, you know, I really want to see that long-term planning, long-term holistic thinking, you know, taking advantage of all of the you know, all of the great things that we have, you know, ecosystem services approaches to thinking about construction, to, you know, really thinking about what are the long-term investments that are going to move us forward. You know, we can see in, you know, some of the European countries, you know, the amount they've invested in renewable energy, for example, means they can now reap that benefit for the next, you know, 20, 30, 40, 50 years. You know, we need to start doing those kind of things that really benefits the whole of our society, really. So, sorry, waffled on for a bit there, but you know, that's kind of my general feeling, and my feeling that infrastructure is a massive part to play in obviously in the whole planning and built environments. yeah, I think, I just want to see that holistic approach really that integrates everything better, and I haven't seen it yet. So I look forward to finding out more as the white paper turns into actual legislation. But yeah, I hope we see a bit more joined up thinking in future iterations.
Tom, thank you. That's probably a great time to end. I've a good summary of where we are, and I've taken up more than enough of your time. So thank you very much for joining me today, and thank you to everyone who's watching.
Always a pleasure, Neal.